Good afternoon and welcome to BizTech's Asian Midday Market Watch. I'm Brian Fernandez and it's Wednesday, the 24th of May. And we have as our guest today Craig Erlam, Senior Market Analyst at Oanda, coming in from the UK. Craig, it's always great to have you on the show.
Always a pleasure to join, Brian.
Yeah, you froze out a little bit, Craig. Now, before we get your insights, let's take a look and see how regional stock markets are doing and also what crypto markets look like. Bitcoin is below the 27,000 mark. It's 26,766. It's down 2.25%. Ethereum is at 1,826. It's down 1.68%. Now, looking across the regional stock markets, the Straits Times Index in Singapore is down 0.26%. Bursa Malaysia is up 0.02%. Shanghai is down 0.51%. The ASX All Ordinaries is down 0.67%. The Nikkei is down 0.6%. The Hang Seng is down 1.22%. And rounding up the numbers, we've got the Kospi, which is down 0.12%. Craig, your view on market performance in the first half of the day? We've got mostly a sea of red with the exception of Kuala Lumpur.
Yeah, I think it's kind of emblematic of where we stand in the markets right now. I do feel like we are in a wait and see mode in the markets. And what I mean by that is there's a lot that's happened recently that we need more information on, whether that is the inflation story and that we've now just passed the year mark from the invasion of Ukraine. So we're now going to start to see favorable base effects in the inflation data. But to what extent we can only theorize about. So we're going to start to see some hard data that will tell us how quickly we're going to move back to target and how stubborn inflation is going to be. So it's a bit of a nervy moment on that front because that has big implications, of course, for interest rates, but also for growth and whether these countries are going to avoid a recession. Then we've got the mini bank crisis in the US in March and April. We are still waiting to see what the full ramifications are going to be on that in terms of the credit squeeze, whether there's going to be knock-on effects for monetary policy and again the economy as well. China is a big story still. The reopening was initially quite strong. Then it seems to have weakened, primarily services driven, but it's still unclear about how much momentum that's going to have going into the end of the year. And now we have the debt ceiling on top of all of that. Now, don't get me wrong, of all of those risks, the debt ceiling is right down at the bottom of the pile, could potentially be at the top of the pile if everything goes terribly. But it's not going to go terribly. They're going to come to a solution because that would be the biggest own goal in history, I think, if they allow the US to default on its debt. So there's a number of things that investors are watching right now. And what that means is we've seen very choppy markets. And I think, like I say, we just need to wait for that little bit of extra information before I think we can see the next big move.
Okay, what are you seeing from a trading opportunity perspective that perhaps some of your clients are doing? Because obviously, as investors are thinking about, as you said, they're kind of staying out of the sidelines, trying to figure out what to do. What are you seeing from your data at Oanda?
Well, I think what we're seeing is that we're in a corrective mode, and you can see that a lot from the charts, whether you're looking at the equity charts or you're looking at something like gold, where we've seen it come within a whisker of those record highs, and now it's pulled back quite considerably, but everyone seems to still be bullish. So the market's going down, but everyone is bullish. That tells me that we're in a corrective mode and just waiting, potentially at least, for that catalyst, for that confirmation signal. And that tells me a lot about the kind of state of the markets right now. You can see it in the dollar as well. You can see it in bond yields. Bond yields creeping higher, the dollar strengthening slightly. And it seems, again, like people taking that not necessarily defensive stance, but maybe just preparing themselves for what's to come. Of course, the risk in all of this is what's to come isn't nice, that inflation is actually higher, it is more stubborn, it is more ingrained, and central banks are going to have to tip us over the edge, as it were.
Speaking of that, this morning New Zealand said, "Hey, we're still battling inflation," and they raised the rate by 25 basis points, the highest since 2008 December. So that's That's quite a signal to the rest of the other central banks in the region.
It is. I mean, it's worth noting that New Zealand probably has deeper problems than most others in that it has extraordinarily tight labour markets. A lot of this was to do with its closed borders policy. It was a country that was very reliant on inward bound immigration, and when that was effectively closed off, this created this very tight labour market. We saw a housing bubble in New Zealand that was far more significant than what we've seen in most other countries as well. So we created a situation whereby they needed to do a lot more than others in order to just get this under control. And we're seeing now, I do think we're not too far from the end of the tightening cycle, but they're not going to feel too comfortable until they actually start to see the prices heading in the right direction. They're gonna feel comfortable a lot later, I should say, than other central banks. I think other central banks will pause their tightening cycle with inflation at much higher levels and feel more comfortable in doing so than the RBNZ will, and that's why we're seeing rates where they are now.
Now, Craig, as always, thank you very much for your insights. Thanks for coming on the show.
Thank you.
Now, I'm Brian Fernandez, and we've been speaking to Craig Erlam, Senior Market Analyst at Oanda, on BizTech's Asian Midday Market Watch. I catch this show on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks for tuning in.